afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. All right, local shares ending the day flat as inflation quickened to its fastest pace yet since December 2018. The index was off to a bad start earlier after inflation print accelerated to 4.7%. The PSCI even sank by as much as 0.8% to 6,829, as you can see in this chart right here. But it has since taken an upward momentum from there, even poised to end the day higher at one point. But shares tanked just before close, ending the day flat, but on the downside to 6,881.37. The central bank still not changing language here, saying the acceleration in inflation is temporary and that it will still average within 2 to 4% within the policy horizon. The 4.7% print is just a bit lower, though, than median expectation of 4.8%, but still on the upper end of the central bank's 4.3 to 5.1% target band. The uptick still largely attributed to rising prices of food, particularly pork, with supply remaining tight in Metro Manila. But despite that, what's worth noting as well, you have annual CPI in NCR easing to 4.1% from 4.3% a month ago, as prices of food and non-alcoholic beverages decelerated to 7.1%, with meat prices slowing down to 20.4%. That's amid the implementation of a 60-day price cap in the region. But across the nation, one emerging source of inflation, oil, with fuel prices also picking up. BSP Governor Ben Diokno saying the recent uptrend will factor in their next policy meeting that's going to be on March 25. He says they're going to watch out for this, for at least for any secondary effects from higher prices. Diokno says there's no need for monetary response unless there are spillover effects, maintaining that's what needed at this stage is, of course, a supply response. He says the overall balance of risk to future inflation continues to lean toward the downside. Looking at our local currency as well, the peso after that inflation print remaining steady at 48 pesos and 55 centavos to the greenback, strengthening a touch by 0.1%. But the local currency so far, as you can see in this chart right here, on its third straight week of declines, its longest retreat yet in over a year. Now we'll talk more about inflation, those inflation figures, with our guest later, Pamantasan ng Lungsod ng Maynila President and Economics Professor Emmanuel Leyco. But for now, let's check on our leaders and laggards for the day. All right, let's have a quick look first at our best performer here. You have ICTSI, which is up by 5.1%. That's after the port operator reported a modest 1% increase in their 2020 net income to $101.8 million. But what cheered investors is the firm's optimism that trade volume recovery will stretch into 2021. ICTSI now priced at 124.90 apiece. Now also, as you can see, a far second here would have to be Aboitiz Power. That's after its entry into the battery market with 12 projects, starting with a 49-megawatt battery energy storage system in Mindanao. The stock higher today by 2.5% to 25 pesos a share. Also, as you can see here, telco giant PLDT also ending the day in the green, up 0.7%. That's after it says that capex for 2021 may reach 92 billion pesos to sustain revenue growth amid strong demand for data. It will also pay 40 pesos a share dividend next month. PLDT up 0.7% to 1,299 a share. Now, off to one earnings report, particularly DMCI, net income for full year 2020 coming in lower by 44%. That's at 5.9 billion pesos. Core net income, likewise, as you can see here, down by 47% to 6.6 billion pesos. The engineering conglomerate attributes the decline to strict quarantine restrictions and economic impact of the pandemic. Its bright spot, though, DMCI mining, with core income soaring 165% following a rise in nickel demand from China amid the nickel ore ban in Indonesia. Earnings from other units, though, on the downtrend. That includes Semarara, DMCI Homes, and Maynila DMCI. As you can see right here, ends the day lower by 1.1% to 5 pesos and 39 centavos a share. Lastly, let's go to Cebu Pacific. The budget carrier has given the go signal for a 16 billion peso 10-year loan with several local banks. That includes the likes of Land Bank, Asia United Bank, BPI, Metro Bank, and even Union Bank. This will be used to fund Cebu Pacific's capex. The carrier on steady flight today, with shares inching higher by over 8% to 45 pesos apiece. Now, here are other stories from the corporate front. Need to withdraw cash and go for a convenience store run? 7-Eleven wants to offer services for both errands. Philippine 7 Corporation, the operator of 7-Eleven stores in the Philippines, is looking to install over 300 ATMs in its stores nationwide by June. The listed company partnered with Pito AXM Platform as a subsidiary of its sister firm 7 Bank to offer such services. The firm says the ATMs can facilitate real-time cash deposits and withdrawals and is accessible 24/7 to BDO and other BankNet card holders. Philippine 7 said there are plans to expand this service further to boost financial inclusion. The company has more than 2,900 stores in its network as of end December. Now, moving to telcos, Globe is targeting average speeds of 50 to 120 Mbps in remote areas with a new partner, wireless broadband manufacturer Curvelux. Globe and Curvelux will be using an alternative fixed wireless broadband solution to cover hard-to-reach areas. Globe says it has been working with Curvelux for the past year and a half now to expand its network coverage. The Ayala-led telco closed lower on Friday at 1,992 pesos a share. We circle back to our top story with inflation print quickening to its fastest pace yet in more than 2 years to 4.7%. Will this remain elevated and for how long? To get his insights, we have Pamantasan and Lungsod ng Maynila President and Economics Professor Emmanuel Leyco. Prof. Leyco, good afternoon, sir.
Good afternoon, Jes. Thank you for having me back.
All right, sir. We were having a quick chit-chat before the show. You were expecting February inflation to come in at 5%. Where do you think did you miss your expectations? Was a 4.7% a surprise?
Well, I did not have the exact numbers on how the shortage in pork or the lack of pork in the market would kick in. But 4.7, I think, is within the expected band for our inflation this month. And considering 4.7 coming from 4.2, I think that is rather high. That's very high. And then if we compare it to what it was like last year, 2.6, 4.7 is very high. So I think it doesn't give us comfort that the actual 4.7 inflation fell below some of our inflation forecast. 4.7 is very high.
Mm-hmm. But question now is, when do you see inflation peaking and at what level?
Well, first it was the pork shortage last month and continuing on this month. And then the price of oil is already beginning to kick in. In fact, if we look at the numbers, transportation already went up by, to 10.4% inflation compared to what it was 8.7% last month. So oil is going to be a major story in the next month's inflation statistics.
Okay, for you now, oil and fuel prices are going to be at least a part of the narrative in the months forward when it comes to inflation. But also, I want to zero in on one other thing here. Was it a surprise for you that Manila CPI decelerated with food prices also lowering, meat in particular, amid the 60-day price cap on pork? And what does that say about measures put in place to address the supply gap?
Well, I think in terms of how the numbers showed up in the National Capital Region. I think the shift to other alternatives other than pork was more swift than in other provinces, in other areas. So before it was a pork-focused diet, I guess NCR residents shifted to something like fish or something more vegetarian, but I don't think vegetarians are widespread these days. I think they just switched to another form of or source of protein. And I think that it also has a part to play in the uptick in the prices of fish or other alternatives.
Okay, I want to drive on to that point later, especially, of course, we now have reports of galunggong prices also soaring. But I also want to zero in first on your comments regarding pork. So it's not so much about an effective implementation of the price cap on pork, but it's really about Metro Manila residents looking for alternatives. That's why pork prices or meat prices in particular for the month of February actually was lower. Is that correct, sir?
Exactly. Exactly. I think the market behavior was more swift in the National Capital Region than in other areas.
Okay, now, like what you were saying earlier, residents were resorting to other sources of protein. Does that explain the spike in prices for galunggong?
Partly, yes. Galunggong, I'm not sure if the supply of galunggong cope up with the demand, but there is much higher demand for galunggong, especially now that the pork is not available. So I think that can be expected, and that could have been expected also for other alternatives.
Now, I want to ask you again, how long do you see inflation remaining elevated, and when do you see it peaking?
I think as long as our food supply is under threat, stability of our food supply doesn't manifest itself in the market, I think inflation coming or being driven by upticks in food prices will continue.
Okay, but no particular time frame as of now for you, at least.
Well, right now, I'm not seeing stabilization in our food supply yet.
Okay.
I think in terms of allowing more imports, I'm not sure that is going to address it. Again, we're exposing ourselves to currency risks. If the peso continues to weaken, that will also offset whatever prices advantage that we can find in the external market.
Okay, Professor Leyco, how should the BSP color the current uptrend here? We have BSP Governor Ben Diokno saying that it's all temporary, and the policy horizon is still going to be on an average of 2 to 4%. Do you see a monetary action in sight?
Well, monetary action always has its own limitations. I think the basic factors that we have to consider would be the basic or the fundamental forces in the economy, and that is supply. If the supply cannot be stabilized, I don't think any monetary intervention would be successful in addressing inflation.
So it's still primarily a supply issue, of course. But one other interesting thing here for me, do the current inflationary pressures warrant an increase in wages to help residents keep up? Of course, there is already a proposal to hike wages by 100 pesos. Where do you put the balance there?
I think if we increase the wages, the small and medium enterprises will get hurt. Without any assistance from the government, the small and medium enterprises will just basically shifting the burden from the workers to the small and medium enterprises. I think we really have to strike a balance here. The government have to step in big time. You cannot just say, okay, let's increase the prices, let's increase the wages, and not do anything with the small and medium enterprises. Yes, increase the wages, but also let's step in and do more for the small and medium enterprises by way of financial assistance, subsidy, or even tax breaks for the small and medium enterprises.
All right. And then, of course, we now have close to 1 million doses of COVID-19 vaccines already here in the country, a number of those already rolled out. How might this spark hopes of some recovery here, or is it still too early to tell?
I think it's still too early to see what kind of trends we are going to take, because I've been seeing projections like if we do the kind of supply coming in and we do the rollout the same rate we are doing now, it will take us more than 2 years to achieve the 70% coverage for our population. That's long. So I think we'd like to hear more about vaccine programs, vaccine strategy, vaccine rollout. We need to see more supply coming in, and we need to see more rollouts coming, not only in the hotspot areas, but also throughout the country.
Okay, given what you say is a slow rollout of the vaccines, where do you see us? What's your growth projection in particular for this year?
I'm not sure we can see growth now. I'm not trying to be pessimistic, but I just want to be realistic. From a double-digit decline and then a continuing inflation, continuing supply disruption, I'm not sure we can look at or we can look forward to a growth this year. I hope we minimize it to single digits, low single digit, but I think we have to be realistic. We have not seen anything that is stimulating enough for our economy. First, in a consumption-driven economy, people need to have more money in their pockets. Without increase in wages, without more financial assistance, without more cash assistance going to the pockets of our consumers, I am not optimistic that our consumer-driven economy will pick up this year.
Okay, a more realistic expectation there from Professor Leyco, expecting at least a single-digit contraction, if I'm not mistaken. Thank you very much for your time again. Pamantasan and Lungsod, the Maynila President and Economics Professor, Professor Emmanuel Leyco. Thank you, sir.
Thank you so much, Jes. Good afternoon.
And those are the biggest news this trading day, March 5, 2021. Catch Business World Live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Have a great weekend.